Hello, welcome back to my channel. Here is now another video which deals with general introduction to text law. This is, as you know, a relatively, no, not old, but it was one of my first playlists. However, the one or other chapter still is missing. One chapter is chapter 11, EU law and taxation. And as general introduction is just about basics, naturally we only talk about basics of the relevance of EU law for taxation here, and more is going to come in later playlists. Well, the first question one usually wants to know about is why. So why has EU law a relevance for taxation at all? And to get the answer, we have to think a bit more about EU law in general. The member states of the EU decided when they founded the EU to give the EU the power to create own binding laws, so-called legislative acts. Now, that was not the only thing they did. They said, in addition, that when they agreed to the EU treaties, that they took the obligation to follow EU laws under all circumstances. So, whereas in usual international treaties, the signatory states usually reserve the right, silently, implicitly, that they can override this treaty by, let's say, conflicting or contradicting or revoking commands by their parliament to their authorities. It's generally understood that every state which becomes a member of the European Union firmly renounces on any right to override or contradict EU law by own national legislation. So EU law has superiority. It prevails over national law under all circumstances. And that means that if now EU law is created and has something to say about taxation, implicitly or explicitly, that then indeed the national parliaments lose their ability to contradict EU law by new tax rules. So what EU law can do is set a frame for the legislatory activities of the national parliaments, which the national parliaments, once this frame is set, are no longer allowed to transgress. So you have to stay within what EU law still permits. There you have, as a national parliament, a free choice to legislate. However, you have to stay within the limits which are drawn by existing EU rules. So that is the first consequence. Now, when we look to these EU rules, we find out that the EU treaties explicitly give the EU the power to create legislation on indirect taxes. You know that in the field of value-added tax, for example. That's Article 113 in the meantime. However, there is also a more general clause which gives the EU legislative power to act by setting rules, or to allow them to set rules with regard to all fields of law which might affect the proper functioning of the internal market between the EU states. So they have the possibility to create laws, legislative acts, which have relevance for everything which might affect the functioning of the economy in the EU states. And now it is probably clear that also direct taxes affect or influence and thereby affect the functioning of the economy in the EU. So it's a long-standing conclusion from Article 114 and 115 that these general clauses also give the EU the powers to issue legislation on the field of direct taxation. However, it uses these powers relatively reluctantly. And in addition, Article 115 says that for certain very, let's say, highly political topics, such as taxation, there is required a higher majority than usual in the Council of Ministers. it even says that for this area, a majority of 100% in the Council is necessary. So any legislation done by the EU on a matter of tax law needs a 100% consent by all representatives of the member states in the Council of Ministers. So each state has, or each state's government has to give consent before we can have a tax law of the EU. Now again, however, because the treaties themselves, the so-called primary EU law, also contain some rules which might have consequences for taxation if you read them properly. Although these rules usually do not explicitly mention taxation at all, they are general rules. And as they are general rules, they also include taxation, as every other field of law too. Such rules may be state aid rules included in the Treaty on the Functioning of the European Union, or far more important, the so-called fundamental freedoms of the internal market. They are also laid down in the Treaty on the Functioning of the EU, and namely they are the free movement of goods, the freedom of services, and the free movement of capital. So you can see these are the three possible ways how you can earn money: selling goods, selling services, or having capital and living from the interest of dividends. And in addition to that, you have with respect to persons also the freedom of establishment. That is, that enterprise owners can set up an enterprise or a branch of an enterprise or an agency or something else in any other member state. The freedom of workers, and for all persons who do not belong to either of these groups, the freedom of movement, which they can use for private purposes if they fulfill certain conditions which prevent, let's say, abusive behavior. So these fundamental freedoms are enshrined in the treaty. They are valid already now. There is no secondary legislation needed to let them enter into force. And so one can think about if they have consequences for taxation. Now, in practice, although they don't mention taxation at all, these rules have become even the most important rules of EU law for taxation. Why? Again, this is the first question. Why? Why should the question, or why should, sorry, bad day today. Why should rules which don't even mention taxation have strong impacts for taxation? Well, let's have a look. You can always understand things like that if you imagine a most extreme example. So let's first imagine such an extreme example. Let's imagine that the EU treaties do what they do. They give the right to apply for a job in any other country to each worker in the EU. Whoever wants to become a worker, let's say in France, has the right to go there, apply for a job, live there, work in the job, and no EU state is allowed to hinder you to go there and do it. Now let's set up the idea that EU states are absolutely free in writing tax law. They can do whatever they want to do. And so I am a minister in Germany who does not want that people go to France. Don't worry why, I just don't want to. So I can try to undercut the treaty by, undercut is probably completely bad, unfitting word, but I want to escape that thing. I want to change reality. And so if I'm free in writing my tax laws, I simply write a tax rule which runs as follows. Everybody who leaves this country has to pay a tax of 200 million euro as an exit tax at the moment when he or she shifts residence to any other state. That's nice. Because now, on paper, everybody has the right to leave. Yes, you have. However, it triggers a tax. Yes, that's my right, because the treaty didn't tell us something about taxation. So if we assume I'm absolutely free in writing my tax law, I can exactly do this here. What is the impact or the consequence in reality? Well, we can naturally conclude that nobody now can ever make usage of the freedom of workers anymore, because nobody who needs to work or wants to work is going to pay 200 million as a kind of an entrance fee or exit tax when you cross the border and take up a job in another country. That's more than clear. So we have now a divergence between the situation on paper, everybody has a right to go to France and take up a job there, and the situation in reality. Nobody can and will ever afford and will ever want even to go there because of the tax which we set up. So taxation can now change all these rights into a mere sham, into a joke. Huh? Because you can do that game with any other freedom, fundamental freedom in the market, you can do it with any other things. Taxation can influence human behavior. So if you grant somebody a right with your right hand, you can automatically destroy that right with your left hand by writing an appropriate tax law which brings people to renounce on the usage of these rights. So this is the actual situation. So now, if we have to decide how we interpret such a set of rules, jurisdiction can now only choose between two alternatives. 2 points of view are still possible. Either you say these fundamental freedoms do not mention taxation, so they do not have implications for taxes because they don't mention it, then that means that they turn these rights into a sham, into a mere joke. Probably only the most stupid people in the population don't get the joke and still believe that they have these rights. Or, number two, we assume that these freedoms have been granted in a serious way, so that we meant what we promised. Then you must necessarily have limits for the freedom to write a tax law, because otherwise you could do exactly what I have done just a few slides ago. You could invent that 200 million exit tax for every worker who plans to take up a McDonald's job in Paris. So that's the two alternatives which you can choose from. And naturally now, surprisingly, EU law says, and the general conviction about EU law says, this project is meant seriously. States have agreed on shifting legislative powers to a supranational institution, yes. They gave it a parliament. They wrote laws that legislation is possible. They wrote into the treaties that everybody has to abide with these rules. That sounds serious, and it's meant seriously. So you can only come to conclusion number two. That's common sense. So that is naturally what then the Court of Justice said when they first asked it for interpretation. How is that conflict to be solved? It just said the only possible conclusion is only the second interpretation. The fundamental freedoms must have implicit limits to the freedom of the member states to legislate on taxation, and by the way, on any other field of law. So that's the first conclusion. However, this is not the full truth until now, or not everything which makes us happy, because our analysis showed now only that because these rules exist, the member states can no longer be completely free in what they write into the tax laws. The interesting question, nevertheless, or however, is now, what exactly are the limits? Where can jurisdiction by logical analysis draw a line in detail on what is still allowed And where are now the limits for the tax sovereignty of the member states? That is the highly interesting idea behind dealing or occupying oneself with the jurisdiction of the European Union Court on the implications on the fundamental freedoms and other EU rules for tax law. By the way, if you are surprised by that and think, can't be that a legal text has implications for a matter which it does not even mention, then I just want to remind you that the situation is nothing else in the field of constitutional rights in national constitutions. For example, if a national constitution like the German one, the Basic Law, gives citizens such rights as you may live in dignity and bodily unharmed, you have the right of ownership protected by the law and by constitution and by the state, and you have the right to choose your profession according to your own preferences and will, unforced. So, and other rights like these. Then, following from such a thing, it automatically follows that if you say you have the right to live in dignity, you cannot do senseless things, not like if somebody has 10,000 euro income which he or she needs to survive, then you can't levy a tax of 30%, that's 3,000 on them. If the consequence then is that you have to support them otherwise, again with 3,000 euro by welfare payments. So that would be unnecessary, senseless under the fiscal aspect. And the only effect would be that the dignity of a person who can care for himself or herself is now impacted by a legislation of the state, which brings no financial revenue in the end, only creates bureaucracy and humiliates a person and changes that person from an independently living person into a beggar to the state. So if you heard this, you can understand why, let's say, the German Constitutional Court always ruled there is a constitutional right to a basic allowance in income tax, which must be realistic enough to allow most people in the population to have their elementary needs of survival covered by that basic allowance and left free of income tax. Article 1, a right to human dignity. When or if your constitution says you have a right of ownership in your civil law and it's protected by the constitution, logic says you can't allow that this right of ownership is unnecessarily impacted or even transformed into a mere nothing. So you can't tolerate a tax where the ownership of people ends up in that they just for tax reasons have to sell their property, that they can't enjoy their property according to the tax laws. That, for example, brought about a thesis, a theory in German literature, brought forward, I believe, at least once by Joachim Lang, professor of former times for tax law in law discipline at the University of Cologne, who wrote in his habilitation thesis that naturally that is the constitutional background of the realization principle in income tax, that only when the taxpayer has decided to part with his property for his own reasons, that then the state collects a tax on the gain and not decides to levy first a tax, so that the taxpayer is then forced to sell in order to be able to pay the tax. So the idea that the state has to wait until the taxpayer says, now I sell and realize the gain, that is even brought into connection with the Constitution here. And if you say that if the Constitution gives you a free choice to choose your profession, then naturally you would also see it as very, very skeptical if certain professions are charged with a tax of 90% or 100% or 99%, whereas all other professions end up with a tax burden of 40%. So a combination of taxes or a single tax, which leads to the effect that in real life nobody could ever choose this legal profession anymore, would naturally violate the person's right to free choice of their professions. So that what you probably saw as surprising in EU law, that a general right, a basic right, automatically leads to conclusions for limits for tax legislation, that is perfectly normal in national constitutions too. So, to sum up, with tax law, you can influence any behavior of humans. So with tax law, you can also cause people to renounce on every right they have just because they want to avoid the tax combined with these rights. And so you can deprive them of every right cleverly by just designing your tax laws in a way that they get a strong or even a compelling incentive to renounce on using these rights. And that is what cannot be tolerated. And that is the whole dogma which lies behind the conclusions or the demands or the theories of the European Union Court of Justice and other EU law experts on why and how EU law restricts the possibilities of member states to create tax laws. Now, interestingly, all these fundamental freedoms mentioned by EU law have a common structure which underlies them, because they all forbid any discrimination on the grounds of nationality concerning any citizen of the EU who makes usage of any of these freedoms. And secondly, they also forbid the member states to restrict the usage of these freedoms in any other way. So, discrimination is forbidden of persons and restrictions. Now, what is discrimination on grounds of nationality? Required by that term are traditionally, first, that there is a distinction in the treatment of people on the grounds of citizenship. However, it's not narrowed down to calling it citizenship, but it also includes any distinction according to any other criterion, which mostly leads to the same effect. That's the so-called indirect discrimination or covered discrimination. Furthermore, you need a different treatment in the same situation under the same circumstances, which leads us to the question, what is naturally a relevant difference in the situation, what is not. But naturally, that's common sense, because if two people are treated differently because they did different things, that is not discrimination. And a discrimination can only one treatment which is to the disadvantage of the protected person. So getting a preferential treatment can never be called a discrimination. So that leads to the following question, or automatically to the question, when you decide if a treatment leads to a disadvantage or to an advantage of a person, which advantages and disadvantages can you see together, and which have to be disregarded when you which advantages have to be disregarded as not connected with that situation and that rule when you decide if a rule is discriminatory or not. So some interesting consequences. And last but not least, there must be no justification, legal justification for the discrimination. That can be either an explicit one or an implicit one, where jurisdiction says, well, a different treatment is allowed implicitly, tolerated silently by law as long or because there is no alternative possibility to yeah, to run the world without that everything breaks down. So it might be that certain different treatments may be yet accepted or still accepted because there is no possibility to do it differently, so that there are absolutely compelling reasons to go on with the different treatment of the persons involved. Well, you see that already brings along a mass of stuff for discussions when you go into details, and this really fills pages and volumes of the jurisdiction of the European Court of Justice, talking about how one can check these points of that legal test. Well, what is a restriction of a fundamental freedom naturally also needs to be defined, because otherwise you can't deal in a reasonable way with that second rule, and jurisdiction is forbidden. So a restriction is, according to constant jurisdiction, any measure which either hinders the usage of a freedom completely or at least makes its usage less attractive. Now, less attractive is the important part, because that something really hinders completely the usage of a freedom is relatively rare. So making a usage of a freedom less attractive, that again brings along some problems automatically, because making things less attractive requires to compare the situation or the measure with some other situation. How would it be without? Or so. Now, EU law does not define that other situation, and the jurisdiction of the European Court of Justice does usually not do it either. However, in most cases, it is understood that the treatment of a protected cross-border activity is just compared to how that state in question treats the identical activity in a merely national framework or frame. So you compare the cross-border situation to the interstate situation, and if the cross-border situation is treated less attractively, then that makes it a restriction. So you could also sum up that a restriction is nothing else than a discrimination of the cross-border activity in comparison with the interstate activity of the same kind. However, that's already a simplification, because it leaves out that possibility to hinder cross-border activity completely. However, it properly reflects most of the relevant cases, so that can be used to sum up what the restriction is: discrimination of a cross-border activity within the EU, between EU states, in comparison to interstate events of the same kind. However, this definition is extremely wide, so you also have again the addition or the additional test that you have to ask if that restriction can be justified from the perspective of the treaty, so that it's not forbidden but tolerated. Such justifications for restriction can be, again, either explicitly laid down in the treaties or implicitly contained in the logic of the treaties and thereby tolerated. So if a first test shows that a certain measure is a restriction, then you still have to do the additional work to test if that measure can be, at the present stage of events, still be regarded as explicitly or implicitly justified and thereby tolerated by the treaties. This this has to be with regard to the implicit conditions, seen in a relatively narrow sense, because, well, implicit exemptions from the fundamental freedoms are those which are nowhere really mentioned in the treaties. So The idea is, well, that was so self-evident for the writers of the treaty that they had forgotten the idea to mention these exceptions. So it's only based on common sense arguments. They can't have wanted this outcome. And that means automatically that you have to restrict such an interpretation to very, very not small cases, but few cases. Because otherwise you could say, well, they wrote a treaty, they made some solemn promises, and naturally they forgot the exceptions, and the exceptions uncover 99% of the realistic cases. That would again render the whole thing into a joke. And what can be meant? My favorite example is again a very drastic one. Now imagine, for example, I, as a German, take up a new job, self-employed, and I go to Italy, and somewhere in Sicily I shoot somebody in the open street in front of the eyes of the police. Policeman comes and says, well, you are a murderer, you just shot somebody. Then I say, yes, I do so. But I was paid for it, and it's a cross-border service. I'm a service provider from another state of the European Union, and the European Union Treaty enshrines my right to provide cross-border services as an independent supplier of services. And national law is not allowed to restrict my activity. And now if you arrest me, that's not making it less attractive, that's hindering it. So by this way, you don't regulate my activity, you just exclude my whole sector of economy, my whole profession from a fundamental right enshrined by the treaties. So please let me go. And don't discuss long with me. I still have a list of 13 people to do this weekend. So I sue you for financial damages if I can't cover my whole list. This would be possible if you see that the freedom of services is a basic right given to you and which cannot be absolutely not restricted by the member states' legislation. Now, this example shows you that cannot have been wanted. No member state can ever have wanted this outcome. So you can say that between the lines, it was so clear that this, the professional murderer providing cross-border crimes unlimited and unhindered, this cannot have been wanted. So we can conclude that at least this example is implicitly not a case where the freedom of services is granted without any restriction by the treaty. Now you would say that's clear because it is an illegal activity. However, things are not so easy because if we say that every illegal activity is automatically excluded from the freedom of services, then we end up with the fact that, well, who is going to decide which activity is an illegal profession? The member states. So the member states could just, to keep foreigners out of their market, declare all activities where foreigners are strong competitors as illegal and thereby exclude them from their markets. So that would be again a bit far-fetched. So but what we can conclude is evidently that at least when we say there must be implicit limits to the fundamental freedoms, which I think after my example everybody will accept, that we should restrict these implicit exceptions to cases like these, where saying the fundamental freedoms are above all would bring down the downfall of civilization or of a whole legal system or of important elements of a legal system. So you should restrict these implicitly tolerated exceptions to things which are absolutely necessary to avoid the downfall of everything which we ever cared for. So if we have that in mind, we automatically end up with a test containing 4 criteria. And naturally, all of them must be fulfilled in order to accept a breach of the fundamental freedoms as an allowed restriction from the perspective of the treaty. First, the measure which you discuss must naturally have a legitimate aim. Now, I once saw a discussion 20 years ago when somebody was enraging himself about now the European Union decides what we have as legitimate aims of policy. And the answer is no, it does not. A legitimate aim is every aim which a member state can choose, as long as it is not the aim to contradict the orders of EU law. So, for example, an illegitimate aim would be EU promise to open the markets, and our aim is to keep the market shut and the foreigners out of the market. That would be illegitimate because it is directly directed against what the EU wants and what we promised the EU to do. So that makes it illegitimate. However, any other aim, even if it's a nonsense aim, an aim of our policy might be that we want to increase the number of white elephants living in the gardens of our citizens. This is evidently sheer nonsense. However, it is not directed against EU policy. It does not want to undermine what we promised the EU. So from the perspective of sovereignty of a member state, this would be surprising, however, a legitimate aim of national policy to increase the number of white elephants living in the gardens of our wealthy citizens. So legitimate aim, yes. Then the measure in question must actually serve that aim. So it must be a measure which could really reach that aim, partly or most in full. Because if only the aim is sufficient to justify a measure, then I could always say, from a logical point of view, this measure serves this, or this measure works as a restriction, however, it serves a legitimate aim. For example, I might bring forward that nonsense argumentation that taxing foreigners or taxing a cross-border activity with 50% instead of 40% has a legitimate aim to support the increase of the number of white elephants living in the gardens of our wealthy citizens. Then you would probably say, but this is evidently sheer nonsense. It has nothing to do. The tax rate has nothing to do and no impact on the number of white elephants living in the gardens of our citizens. And I would say yes. I say yes, there is no connection. However, my official aim is legitimate, then the measure would pass. So you naturally need that combination. The aim must be there and the measure must really contribute to reaching that aim in a measurable or important sense. Otherwise, it would be just a nonsense rule following or aiming at a nonsense aim. So the measure must be able to reach that aim. So and that can also be justified by if a measure is not able to reach its aim, at least partly, it does not deserve to be tolerated, because a measure which does not work in the way it should work doesn't deserve protection against a higher aim or a higher rule. Then the measure should not go far further than it needs to be. So it should not be excessive. You should restrict your restrictions to the necessary extent, and you should not do more than you need to do. There is that famous story about a campaign of the church against not Protestants but deviants from the Orthodox rural church teachings of that time, somewhere in southern France, where somebody said we need to eradicate heresy. What are we going to do when we conquer that city of where people live who do not follow the teachings of the church? How can we distinguish the bad ones from the right ones? And the recommendation was just kill everybody. God will know who is bad and right. This would be regarded as a bit excessive, and that's a very good explanation or example for how you can be excessive. You reach your aims, yes, you just kill everybody, so you also kill the bad ones. However, you do more than is necessary, and it's definitively excessive, so such an idea could never be protected. Huh? Very often that plays a role when a text rule brings forward, I am designed to hinder abusive behavior. Yeah, and then the European Court of Justice says, and what do you do if it's in the individual case absolutely clear that it's not a matter of abuse? Do you at least allow the proof that this measure, or that there is a case where there is no idea of abuse, so that is it not that this case is then not treated as abusive? And if that is then not done, then it's clear that the measure is excessive. And the last requirement is that such a problem must always then be dealt with in a non-discriminatory way. That means that if you have the same problem in a national context and you treat it far more generous, then you disprove your own argumentation. For example, there are cases where you follow a legitimate aim when your measure is absolutely convincing, when it's not excessive, but you don't care at all for the same problem in other cases. Then you admit that for your legal system, evidently that is not so compelling to take measures as you always pretended. A good historical example for that was that a state demanded that milk, when it was imported from another member state, had to be stopped at the border and sterilized to kill off any bacteria in the milk. The aim was to protect public health. That's a very legitimate and highly ranking aim. To sterilize the milk is also an adequate measure to reach that aim in an adequate way. Completely okay. There is no better way to reach that aim than to treat the milk. However, in the same state, it was allowed for citizens to go to the farmer and buy milk immediately fresh from the cow, completely untreated. So in that case, one could see that there was a legitimate aim of the measure, that it was adequate, not excessive, but the same state did not care at all about the whole problem in an internal context. They didn't care anyhow about health issues when it came to buying from their own farmers. And that was dealing with the problem in a discriminatory way, and thereby admitting that the stricter measures, the adequate ones, were absolutely not compelling from your own perspective, evidently. So that explains these four categories, and you naturally then have to ask the European Court of Justice always, when it comes to the suspicion that a tax law is perhaps a forbidden restriction, what is the aim? Is it adequate enough to reach that aim? Is it excessive? And is in the legal system of that state the problem dealt with in an arbitrary way, so that it's discriminatory between different cases of the same problem? There is a distinction in the cross-border case. The protected case is treated more strictly than other cases. Very often all that is discussed in court, and you can see how deeply, for example, a court then has to investigate, or a fiscal office has to bring forward arguments to clear up all these four questions. And probably somebody arguing in favor of the taxpayer bringing forward something is a forbidden restriction will try to prove that there are cases which prove, well, our law does not really care about the whole problem in another connection. What we do here is excessive from our own measures, which we apply somewhere else, or that there is a measure or that there is a rule in play which does not really actually reach its purpose. Also relevant for taxation may be the rules, or often are, the rules on state aid to enterprises, because state aid to enterprises is forbidden by EU law if it's not explicitly allowed in the individual case by the EU Commission. Now, state aid is nothing else than the financial support by a state to an enterprise, usually which is in a crisis so that it can survive. And now it's relatively clear that if you give financial support to an enterprise by a cash payment, this is exactly the same as if you renounce on taxes which you otherwise could claim. So there is a long-standing jurisdiction which says naturally giving a tax privilege to a kind of to certain enterprises is effectively the same as a state aid is a state aid and is also then forbidden if it has not been explicitly allowed by the Commission. Now, there is one very, very interesting aspect for practice, because that is the rule that state aid is forbidden is a part of the EU treaty. It's valid law and it's higher ranking than every other national law. So if there is a conflict that EU law says a state aid is forbidden and is not valid if it has not been explicitly allowed by the EU Commission, and a national tax law says you don't need to pay the full tax which others pay, then the state aid rule prevails over national law. It has always prevailed. The conflicting national rule never was valid. So it might be that if you live in a state where the corporation tax rate is usually 35%, but you as a bank get a special rate of only 10%, that this is then convincingly qualified as a state aid to banks. You pay less corporation tax than others, an exception for a special sector. Now, if this has never been agreed upon by the EU Commission, then this 10% tax rate has never legally existed. It was always blocked by the rule state aids are not allowed. That further means that in such a case, the 25% difference would have been due even in the past, although you and your tax office didn't know it. So you would be forced under the legal aspect still to pay the missing 25%. If you then say, but I got a tax notice and 10%, and 10% is my right, then one would tell you, no, 10% never existed in your case. 10% was always an obvious mistake, and by the way, naturally, national rules on a deadline for correcting a tax notice are naturally then a measure which has the aim to render an EU rule invalid or ineffective. Naturally, you have always to pay back the forbidden state aid amounts with interest to the state from whom you got it, and there is no simple deadline rule which hinders that. There can only be rules on the EU level which allow that certain very old cases can be left untouched. Usually you can at least expect that you will have to pay back for the last 10 years, which usually then is going to kill you. So that makes state aid rules highly interesting for debates. Naturally, as state aid rules lead to higher taxes, they are not the favorite topic of tax advisors. However, they might be a favorite topic of the EU Commission officials and also of some, let's say, employees in the ministry of a nation state. State aid rules naturally must be an exception from the general tax system. That brings along a very decisive question. A state aid rule must be an exception if you renounce on taxes which otherwise would have been paid. Then you need a selective nature. You need a kind of exception character of that rule. So the criteria by which you can judge that some measure is selectively privileging one enterprise or several groups of enterprises or a sector of economy, that are the most interesting aspects or criteria for discussions in that area. And there is naturally enormous literature and enormous case decisions on that. Yeah, I mentioned already in this small video that you also have the possibility that the EU can legislate their own rules concerning taxation. In principle, here you have two possibilities. You have EU regulations, which are nothing else than a law of the EU. And a law is something which is binding for the citizens. So it can create rights and obligations for persons living in the member states or subjected to the member state laws. So if there is an EU regulation, you don't need to wait for any measure of a national parliament. It's directly a law everywhere in the EU. You directly have to follow it. Differently is the situation with the so-called EU directive. Their most important characteristic is that they are not a law in itself, so that they themselves cannot create obligations for you and me. However, they are binding for the member states. And that they are binding for the member states means they order the member states to change their existing legislations according to the orders of the directive. That means, for example, if there is a certain detail which the EU wants to have identical in all member states' legislations, then they usually don't insist that all national rules are abolished and or that there is an additional law written where this small detail only is contained. They just give the order that every member state has to change their existing laws, let's say on contract law, in that detail. Usually then you add an official footnote that this detail now goes back to the EU directive, blah, blah. And so everybody can look up, okay, this follows from an EU directive, and so have the certainty that this situation is the same everywhere, or that, let's say, the member states had only a right to choose from 3 possible solutions, so that you can know which rules you have now to expect in every member state of the EU. That rule or that way is often used if you don't want to harmonize every detail of a certain matter, but only some important ones. In the field of taxation, measures taken are most often directives. Regulations only exist in the field of taxation when it comes to mostly, not always even, to the question that member states have to share data. There you need a strict rule. For example, if the data exchange format is different in different states, then you have a chaos. So there you need an identical text with really identical rules to the details. In all other cases, usually you give directives where you say certain details existing in the national tax laws have to be harmonized. The most important directives, the famous ones, are the value-added tax directive, which nowadays contains more than 400 articles on the details which have to be followed by the member states when they legislate on value-added tax. so that in practice nowadays value-added tax law is made on the EU level. We have in the field of direct taxation the merger tax directive and the parent subsidiary directive. The first one regulates cross-border reorganizations and their tax treatments. The second one regulates the cross-border treatment of the treatment of cross-border dividends between an EU company and its EU parent company. We have also, again, for groups of enterprises, the Interest and Royalty Directive, which says that interest and royalty payments made within a very small, narrowly defined group of enterprises have to be left free of withholding taxes in the EU. Then we have, after a long break, a series of new directives which follow or which are a consequence of the OECD BEPS project. Here one first has to mention the so-called Anti-Tax Avoidance Directive of the EU, with several small updates later. We have a directive on the settlement of disputes concerning the interpretation or application of double taxation treaties in individual cases, which gives the right to arbitration to every taxpayer in a member state when a double taxation treaty is not applied in a conflict-free way. And we have, last but not least, agreed upon just this month, December 2022, a directive on a global minimum taxation, highly complicated rules for important and very large multinational groups, where the EU says we comply, we make obligatory for these multinational groups the system set up by the OECD in the global minimum taxation rules proposals, and where they oblige the member states to transform all that into national legislation. There are more rules even like that, and as you see, after a long break, evidently the fight against multinational enterprises who try to save taxes and end up with 1 or 2% worldwide taxes on their profit, that seems to motivate the fiscal ministers of the member states to sometimes agree to 100% unanimous votes on directive proposals. So it might be that in the next years the one or other rule is still to come. However, a complete harmonization is not going to happen during our lifetimes in all probability. Now, when we see all that, we see that we have already many, however, sometimes small and sometimes unimportant, in other cases very important rules throughout the EU, and these rules can have an impact on tax legislation. Well, now the problem is we have identical rules for all the territory of the EU. The problem now is to have uniform text and rules throughout all EU states makes no sense if later these rules are not applied in the same sense. So if every court of a member state interprets these rules differently, then we have a chaos. Then we would pretend to have identical rules, but they would in reality actually be different still in each member state due to the different interpretation by different courts. For this reason, you have to set up, or one had to set up, a mechanism which made sure and still makes sure that EU law is everywhere in the EU always interpreted in the same sense. How can one achieve that? Well, for this reason, the European Court of Justice was set up. That is a court in Luxembourg where every member state sends one judge to. So we have 27 judges at least. And this court was given a kind of a quasi-monopoly on the interpretation of all EU law. Not on the application to the individual case, but only on the interpretation, because that is what can create a chaos. So the legal rules are simply, when you go to a national court and begin a lawsuit where your argumentation or the argumentation of the other side or the decision which the judges want to take is based on an EU rule. And the interpretation of that EU rule is not absolutely clear, is debatable. Then the National Court always has the right to ask the European Court of Justice for a binding interpretation of that rule to make sure that we have an authoritative, correct interpretation of EU rules. However, even the rules are stricter. When there is a national court which decides the matter in question as highest instance, so that its court decision can no longer be reviewed under normal circumstances, that the decision is really final, then they are not even allowed to give an interpretation of EU rule. They have to refer the case to the European Court of Justice to explain the question of interpretation and to ask the court for a binding interpretation. Then when they receive the answer of the court, they have to apply this interpretation to the case data and to find their decision of the case based on the uniform and correct interpretation of EU rules by the ECJ. This way, it is secured that throughout the whole EU, the interpretation of existing EU law is always identical, so that we never have that situation that an identical legal text is in practice, however, still split up or still not identical. And in such cases, the decisions or the cases are called preliminary, the decisions are called preliminary rulings, and asking for such a preliminary ruling is referring a case to the ECJ for a preliminary ruling. One must know, usually court decisions are just decisions in an individual case, and other cases can be brought to court differently. Now, the preliminary ruling is not a court decision in the classical way for an individual case. It just is a binding interpretation, a general interpretation of the rule in question under the aspects of the case where interpretation questions have shown up. And the preliminary ruling decision just clears the meaning of this rule for all comparable cases and for all situations. So it's a generally applicable interpretation of the rule, not the decision of a single case. So that general nature of these findings in a preliminary ruling justifies and explains why, when there is a court session or hearing on such a preliminary ruling case, every government of a member state can send a lawyer to represent its interests there, bring forward their arguments, and bring forward their way of interpretation of the rule, so that their opinion on the rules will be taken into account when the court finds the correct interpretation. Otherwise, if it were only the decision of an individual case, that would not be necessary. So naturally, the question is, where can you inform yourself about EU law in a better way? And there is naturally, in the times of the internet, a database of the European Court of Justice available on the internet. It's here, Curia, that's Latin for the court, .eu, and here you find all the decisions of the European Court of Justice from the last 30 or 40 years, with further access to very old cases. And some details. When you go to the European Court of Justice database, you must know there is the court in the narrowest sense, and there is also below them a tribunal of first instance for cases of usually minor importance. So preliminary rulings always have a file number beginning with a C for court or case, whereas the tribunal cases have a file number beginning with a T. So focus on the C decisions. Well, that was what I have to tell you about EU law and taxation. I thank you very much for listening, if you listened. I am happy that you perhaps now wake up if you fell asleep. And as usual, you know my small request. If you like this video, press the like button and recommend it to others. Even share it. If you didn't like the video, recommend it to persons which you don't like. And so recommend it and like it in all circumstances. Yeah, thanks very much. Hope to see you again soon. And yeah, have a great rest of the day. And goodbye.